Welcome to Safe Money Radio with your Cashflow coach, Del Fujinaka. Del is a cash flow and retirement specialist, primarily serving family estates and small business owners in Hawaii. But he's sought after nationally for his expertise in helping people secure their transitions towards and in retirement. Mr. Fujinaka is a CWS and CEPA certified professional in the state of Hawaii, and he specializes in working with people who are near retirement or who are already retired with wealth management, income planning, tax efficiency, and asset protection strategies. And now, here to talk with you about no market risk, cash flow, and retirement planning, your host, Del Fujinaka.
Aloha! This is Del Fujinaka, your host, welcoming you to Safe Money Radio. I am your cash flow strategist, simplifying the complexity of money management to build stable wealth right now and for the future. Have you ever heard of spend down income planning? It is the most common type of financial planning in our industry. In fact, about 95% of all financial professionals practice this type of planning. Even though spend down strategies are so common, you might have never heard about them. Unfortunately, financial planners don't usually explain the foundational theories behind their strategies. So, what is spend down planning? Spend down planning is when you try to build up a pile of retirement money based on a hypothetical rate of growth. It is hypothetical because you don't know what your growth rate will be or if you will have any growth at all. It is very common for financial planners to look to past results to try and illustrate what might happen in the future, so the growth estimates are clearly purely speculation. One thing is for sure, no financial planner that sells or recommends risk-based accounts is going to illustrate you losing money or getting no growth. For this reason, it is not uncommon for expectations to be set on the high side of what might actually happen. For example, could you lose 40% of your account tomorrow? The answer, of course, is yes. Has any financial planner illustrated that possibility for you? Not likely. Also, money isn't supposed to grow just for the sake of growth. Obviously, at some point, usually your retirement date, a financial advisor will show you how much money you can take out of that pile to spend for the rest of your life. This is what is called the spend down rate. A standard table for spending down retirement funds was established by William Bengen in October of 1994 when he published a study called Determining Withdrawal Rates Using Historical Data. In this study, Bengen theorized that with a proper mix of bonds and stocks, you could withdraw 4% of your retirement money each year and have a reasonable chance of not outliving your money. I said, have a reasonable chance of not outliving your money. Let's stop for a second and think about this. Did you notice that Bengen theorized that you could have a reasonable chance of not outliving your money? What on earth is reasonable about having a chance of outliving your money? Before we continue with our explanation of this hypothetical and theoretical planning strategy, let me assure you that our income planning is not based on a reasonable chance, but rather a guaranteed outcome. Isn't it better to know what is going to happen instead of hoping for a positive outcome from the process of guessing? Give me a call now at 808-468-0552. Once we talk, I can determine if we should meet, but first I must determine if I can significantly help you. My number is 808-468-0552. That's 808-468-0552. So let's get back to Bengen's 4% spend down theory. This guessing game of pooling 4% of your retirement funds to live on the hopes that you would not outlive your money was used for almost 2 decades before it was realized that it was way too aggressive. In August of 2011, Wade D. Fowle, PhD, a professor of retirement income at the American College, published a paper titled Can we predict the sustainable withdrawal rate for the new retirees? This was published in the Journal of Financial Planning and debunked the 4% rule for retirement income spend down. The paper explains how a safe withdrawal rate with 60% of your money in stocks and 40% of money in bonds varies widely depending on circumstances that are unpredictable. And for some people, retiring, the safe withdrawal rate could be as low as 1.5%. 1.5% is a lot different than 4%. If you have $1 million, that means you can only draw out $15,000 a year and have a reasonable certainty that your money will last for the rest of your life. Now, how can that be true? It is simple as math. If you have $1 million, take out 4% a year, and then experience a massive market loss, you will have to withdraw a much larger percentage of your funds to keep the same amount of income. A 4% withdrawal could easily turn into 8% withdrawal, and then a 12% withdrawal because of the market losses. Once you experience a significant loss, it's almost impossible to recover. It's kind of like tipping over dominoes. You can't undo dominoes falling once the first one tips over. If you don't believe me, let me prove this to you. We have a complimentary handout that would like to provide you called the Sequential Rate of Returns Risk Illustration. It mathematically proves the massive negative impact on the sustainability of your retirement with a single significant market loss. If your retirement money is primarily invested in funds where you're exposed to the market risk and someone is not talking to you about sequential rate of return risk, then you have a ticking time bomb waiting to go off and don't even know it. Not only that, but we have income plans that pay out guaranteed income for life, even on a joint basis, that neither you nor your spouse can outlive. These income plans can pay substantially more than 4% of your income account balance. These accounts can grow at rates of up to 7% or more for the purpose of receiving guaranteed lifetime income. Why would you want to be put in a position to withdraw less from your retirement account because you are worried about running out of money before you die when you can withdraw more and never outlive your income? If you'd like to learn more, call for your complimentary Safe Money book and Safe Money information kit at 808-468-0552. Let's work together to take income uncertainty out of retirement so you can enjoy the golden years without financial stress. Again, our number is 808-468-0552. Well, I must take a short break. This is Del Fujinaka and you're listening to Safe Money Radio. Let's pause for some exciting announcements.
Have you recently changed jobs and now you have a 401k or other retirement account you don't want to risk in the market? You've worked too hard to leave your retirement to chance. And since you'll probably start another retirement account at your new job, why not make sure nothing happens to your last one? Del Fujinaka can help you roll over the retirement account from your previous employer and give you guarantees of growth without any market risk. Did you know that if you're age 59 and a half, you can move money out of your employer plan even if you're still working there? Call 808-468-0552 now and ask about up to a 10% bonus on your retirement money just for opening an account. Put your money on an elevator that only goes up. Our phone number again is 808-468-0552. That's 808-468-0552. You can get your free Safe Money information kit by calling us now. 808-468-0552. You're listening to Safe Money Radio with your host, Del Fujinaka.
Welcome back. I'm Del Fujinaka, your host of Safe Money Radio. I am a no-market risk retirement specialist working with clients right here in the heart of Honolulu, Hawaii. In 1988, Bobby McFerrin released his song, Don't Worry, Be Happy, which reached the number 1 on the Billboard Hot 100 chart list. Not only was this song catchy, but it would bring a smile to just about anybody who listened to it. Unfortunately, for many of our seniors today, a song telling them not to worry isn't going to help the reality of the problems they face with planning for income, long-term care, and living a happy life in what should be the golden years. Singing a song is easy, and unfortunately, that is what many in the financial planning industry are good at. If you're tired of getting the same old song and dance telling you that you have nothing to worry about when your gut is telling you that something is not right, then maybe it is time to turn off the music and start dealing with the reality. I say trust your gut discernment. And listen to this, I specialize in making sure that the golden years are golden by focusing on strategies that guarantee growth, minimize or completely remove fees that are deducted from your account value, and provide the option of guaranteeing income that you can't outlive. We focus on long-term care needs, tax efficiency, and not only leaving a legacy, but how about living your legacy, based on making sure that you don't have to be dependent on anybody, especially your family members, in your final years. I tell you what, I'm not just going to tell you, don't worry and be happy. I'm going to show you, based on contractual guarantees, that you don't have to worry about market losses or outliving your retirement funds. Give me a call now at 808-468-0552. Once we talk, I can determine if we should meet, but first I must determine if I can significantly help you. My number is 808-468-0552. That's 808-468-0552. In July of 2012, Time Magazine published an article titled Lifetime Income Stream, Key to Retirement Happiness. In this article, it showed that people in England and North America were happiest in retirement if they had a pension income they could rely on. In other words, if they had guaranteed income from a pension, they were happier than if they were living from their retirement savings. Folks, we are living in a whole different world. It's not about just being loyal for 40 years and having an amazing pension for the rest of your life. Now, because of frozen pensions by many large companies, you just need to take control for yourself. And again, don't rely on the market. Have some guarantees and have a pension alternative at hand. In 2018, a guaranteed lifetime income study was conducted by the research firms of Greenwald and Associates and Canix, asking individuals between the ages of 55 and 75 with household assets of at least $100,000 about the value of guaranteed income. This study was repeated conclusively in 2019. The study concluded that 66% of retirees see a high value in guaranteed income in addition to Social Security. It also showed that majority worry less and are happier when they have guaranteed income. This certainly begs the question, why are so many retirees invested in things where the outcome is hypothetical, not guaranteed, based on arbitrary assumptions and exposed to significant market risk? Now, I believe much has to do with the ignorance and even conflicts of interest. There's an entire industry that wants to get paid trail commissions every year, whether their clients make money or lose it. They want to charge high fees that come directly out of their clients' accounts while keeping their clients ignorant of low-cost alternatives that provide guaranteed growth for the purpose of lifetime income and guaranteed income that cannot be outlived. I'm sorry if that sounds harsh, but unfortunately, all too often, it is the truth. I am here to tell you about an alternative retirement plan where your money can grow at a guaranteed rate of up to 7% for the purpose of receiving guaranteed lifetime income when you're ready. Once you are ready, you can activate your income payout option that will pay you income for the rest of your life while you're still having access to liquidity, emergency funds, and a debt benefit for your heirs. If you'd like to learn more, call for our complimentary Safe Money book and Safe Money information kit at 808-468-0552. Let's work together to take income uncertainty out of retirement so you can enjoy the golden years without financial stress. Again, our number is 808-468-0552. Folks, to wrap up this segment, let me ask you this very simple question. Do you want to be happy? And here's a funny story. One of my clients the other day said, I like managing my investments because I want to keep an eye on my money. Then jokingly, I asked him, hey, wouldn't you rather keep an eye on your wife? Well, how about your grandchildren? Or even your almost scratch golf game? All of a sudden, I could see the light bulb turn on right in front of my eyes. Are you living out your retirement years to serve the stress of managing your retirement finances? Or are you using your retirement years to enjoy the things that are more important than money? If your income is not guaranteed, how are you going to have a happy retirement? How are you going to have the time and freedom to put energy into the people and things that retirement is supposed to be all about? Are you ready to sing that song, Don't Worry, Be Happy? When it comes to your retirement income, think about it. And if so, give me a call at 808-468-0552. Well, I must take a short break. This is Del Fujinaka, and you're listening to Safe Money Radio. Let's pause for some exciting announcements.
CDs, money market accounts, and checking or savings accounts seem to be the way the banks give us the short end of the stick these days. If you have money in a bank, you might even be losing money because of inflation. Don't let low interest rates get you down. How would you like tax-deferred growth that's much higher than CDs with liquidity on a short-term account? Have you ever heard of triple compounding? You can get interest on interest, interest on principal, and interest on the taxes you would normally have to pay if your money was in a bank account. Don't let the bank give you low rates while taking your money to issue credit cards with 18% interest rates. Call now for fixed annuity rates that are way higher than what a bank offers and are tax-deferred. Call us now for short-term money solutions at 808-468-0552. That's 808-468-0552. Fixed annuities are backed by the claims-paying ability of the issuing insurance company and are not FDIC insured. You're listening to Safe Money Radio with your host, Del Fujinaka.
Thank you for tuning in to Safe Money Radio. I am Del Fujinaka, a no market risk retirement and asset protection specialist. Planning requires questions and answers. Unfortunately, many times there are bad plans because of lack of good questions. For example, many of our grandkids these days are being asked what college degree they want to pursue based off of their passions and dreams. Nothing wrong with that, but there should be other questions too. Shouldn't we also ask how much money they want to make or need to financially survive? Another good question would ask if there will even be a job for the degree after all those years of pursuing those credits, sacrifice long nights, and they graduate. The consequences of bad questions can be devastating. We see on top of that, our youth, when they graduate with a useless degree and as much as $200,000 of student loans. Unfortunately, the same question and answer faulty logic used for determining a college degree is also used in financial planning for retirement. The most common question asked for investors is, what is your risk tolerance? The most uncommon question asked is, how much inflation-adjusted income are you going to want or need at retirement? And how are you going to get your income to that amount on a guaranteed payout that you can't outlive? The risk tolerance question is what we call a pass the buck question. In other words, if you decide what your risk tolerance is, then your financial planner or advisor is off the hook and you are determining the allocations of your investments. It becomes your choice, not the advice of your financial planner. Also, it makes you feel like you have a plan when the truth is your entire retirement is still subject to hypothetical, speculation, and arbitrary strategies. Let me suggest that you might want to consider removing hypothetical and arbitrary and even speculation from your retirement planning. I work with guaranteed solutions that create a plan you can count on. Give me a call now at 808-468-0552. Once we talk, I can determine if we should meet. But first, I must determine if I can significantly help you. My number is 808-468-0552. That's 808-468-0552. Have you ever heard of a safety first retirement plan? This is not a new concept since it was developed back in the 1920s. This retirement plan puts an emphasis on prioritizing the intended goal for retirement rather than arbitrary investment decisions that leave your plan open-ended. For example, one priority everyone should have is a minimum amount of income they would have guaranteed for the rest of their lives. Applying a safety-first strategy would mean that you are prioritizing your plan so you have an income floor. For example, let's say you never want to have less than $80,000 a year in income. In that case, you would add up your Social Security, pensions, annuities, property lease income, or any other income that is reasonably guaranteed so that you know that you have at least $80,000 a year in income for the rest of your life. If the income doesn't add up to what you need, the strategy will focus on getting you to that income goal in a way that guarantees success. This strategy isn't just for the middle class. In a Newsmax article, Ben Stein, a celebrity, highly credentialed economist, talked about how he used annuities to make sure that no matter what happened with his investments, he would never have less than a certain amount of income. In other words, he created a floor based on a desired lifestyle that he could never live below. Now, friends, check this other one out here. In April 25th, 2014, Bloomberg article, championship NBA Lakers basketball player Shaquille O'Neal explains how he did the same thing as Ben Stein. Shaquille is not just known for his basketball fame, but is also talented and aggressive in business as well as investing and an entrepreneur. With investment comes risk. So in this article, Shaquille says that he doesn't need or count on his endorsement money because when he first came into the NBA, his money manager persuaded him to sock away more than $1 million a year in annuities. That income is now enough for him to live on, O'Neal says, just in case all the other stuff goes bad. Now, this type of thinking is a difference between what we call if-come planning. In other words, planning that you don't know if it is going to be there when you need it, or the alternative, income planning, that is guaranteed, passive, and residual. There are all types of passive, residual, and dependable incomes. My job is to make sure they all work together to make sure you have an income floor that you can never live below. Some of the plans I work with can grow at a guaranteed rate of up to 7% for the purpose of receiving guaranteed lifetime income. Once you are ready, you can activate your income payout option, which will pay you income for the rest of your life while still having access to liquidity, emergency funds, and death benefits that would go to your heirs. If you'd like to learn more, call for our complimentary Safe Money book and Safe Money information kit. and this is at 808-468-0552. Let's work together to take income uncertainty out of retirement so you can enjoy the golden years without financial stress. Again, our number is 808-468-0552. Well, that's all the time I have for Safe Money Radio this week. Before I go, I want you to know that I sleep at night knowing that none of my clients have ever lost a single penny to market risk. I want you to sleep at night too. Until next time at the same time, I'm Del Fujinaka reminding you to stay safe so you can step into a secure financial future.
You've been listening to Safe Money Radio with your host, Del Fujinaka. Find out how to guarantee that your hard-earned money is safe with locked-in returns and never going down due to market risk, so you can have the future that you deserve. Call Del Fujinaka now for your free Safe Money book and Safe Money information kit at 808-468-0552. That number again is 808-468-0552. The preceding information does not represent tax, legal, or investment advice. Surrender charges apply to base contracts. Optional lifetime income benefit riders are used to calculate lifetime payments only and are not available for cash surrender or in a death benefit unless specified in the annuity contract. Fees may apply. Guarantees are based on the financial strength and claims paying ability of the insurance company. No information presented today should be acted upon without meeting with a qualified and licensed professional. Obviously, by calling us now, you're just taking the first step towards protecting your retirement. It's important that you read all insurance contract disclosures carefully before making a purchase decision. Rates and returns mentioned on this program are subject to change without notice.